Hello everyone, I had to make this video very quickly because I believe that it's very important. I'm just going to walk and have a conversation with you just because I'm spread really thin with all of the things I'm doing. Remember, I don't just do YouTube, I have several companies that I own and operate and a family as well. But I do believe this is very, very important for every trader to know and to understand. And I had an epiphany recently. And that epiphany is that most traders don't understand what I'm about to talk about because no one's talking about it. And the primary reason they're not talking about it is because they have no idea. All right, so if you want to just get the summary on this video and click away, I'm going to give it to you right now. That's how important this message is. But if you do click away, it'll be to your dismay because I'm going to give away some stuff at the end of this video because I think it's a good thing to do. But the summary of this video is as follows. Traders continuously lose money. They flow in and out of the market. They blow up accounts. They have drawdowns. And the failure rate is so high because they do not realize that the markets are actually dynamic. Traders are leaning on strategies, setups, risk management systems, and they believe that what has worked in the past will continue to work in the future. They are driving a car while looking in the rearview mirror. So that's it. And I'm going to tell you the solution to that and why it is very important for you to understand that that is a problem. Pardon me, I have a little bit of a sniffle problem today. The markets are dynamic. They are constantly changing. This has always been the case, but we can be fooled into thinking that they don't because the last 3 or 4 years, they've been pretty much straight up. The market is actually parabolic at this point in time. What happens is every time there is a decline in the market, it brings new traders into the market. And what happens to those traders is quite predictable. So I'm going to outline for you the typical lifespan or life cycle, I should say, of a trader. A new trader learns about the market. They decide that they want to pursue financial freedom, extra cash flow, whatever it may be. And they start researching. They start looking on the internet. Hey, puppy. They start looking at the internet. They start watching YouTube videos. They go to Investopedia. They may take courses. They may start reading books. But in the end, they start putting their money to work. They make their first trade. Congratulations, you're a trader. Anyone can do that. If they did it properly, or really could be just by sheer chance, they may make profits at the start. Recently, in the past 3 years, pretty much any strategy that is bullish will work because almost everything has gone up. That is not the way it has historically been over a sustained period of time. But the trader starts trading and makes a little bit of money, and then one day they start giving the gains back and they start seeing a little bit of drawdown, and maybe they don't blow up their account, but they start seeing drawdowns, and logically they reach a conclusion which will ultimately lead to their demise. The conclusion is that they need to refine their trading strategy and their trading methods. And so what they do is they look at their losses and they modify their trading strategy so that if they were to go through a similar market environment that previously led to those losses, they would no longer have those losses because they've refined their strategy as such. This is extremely exciting. I know because I've done it. Because you go, okay, well, I accounted for that. Now I'm just going to make tons of profit. And that may work for a period of time, days, weeks, maybe months, in some case a year or two. But eventually that strategy stops working as well. The trader will then go back to the drawing table and say, okay, I need a better strategy. That's what I need to change. I have to change my strategy. And so they go back to the drawing board, they research strategies. This takes them deeper into YouTube. This takes them into looking at videos like this one that I made right here. That is the highest viewed video on my channel. All right, so I talk about strategies too. But strategies are not the most important thing, far from it. But let's get back to the life cycle of a trader. At this point in time, they go in, they look at these strategies, and because of how accessible technology is now, they start back testing these strategies, and they find things like, oh, setup that worked 100 times back tested or 200 times back tested. And what's happening is the strategies are being curve fit to the data. It makes a very bad assumption that I will talk about later in this video. So you get a refined strategy, you're excited again, you start trading, and you either have immediate losses or you have a little period where you have some gains, and then you have more losses. And so what happens is, over a period of time, and over a period of time I mean years, not months, you have strategy after strategy that you refine, make a little bit of profits, and then give them back. Ultimately, this leads to frustration. Some traders quit just out of sheer frustration. Other traders blow up their accounts because of poor risk management, and they never figure this out, and they say, hey, this is a random thing, or I was never able to master it, or everyone on the internet are swindlers. Okay, how does this happen? Why does this happen? How do traders get out of this cycle? They get out of this cycle by understanding that markets are constantly changing. They are dynamic, all right? The back-tested strategies, the methods, the techniques, the setups, what they do is they look at information on a particular ticker or a market or sector, and they assume that that information is static and that it will continue to repeat itself. And when that doesn't happen, everything falls apart for the trader. Let me explain to you what's actually important. What is actually important is the environment in which the trades are being taken. It is stock selection, sector selection, currency selection. So the environment will dictate your long-term success or failure and your ability to exploit opportunities in the market. It has very little to do with your trading strategy and almost everything to do with your ability to hunt down opportunities that are easy to exploit. You cannot just willy-nilly apply any strategy to any currency pair or any ticker symbol or any index and win. Some people, by sheer chance, do this because they're exploiting a market environment that is exploitable, and they're doing it simply by chance. Others apply the same strategy to a different market, a different ticker, a different sector, and that leads to very large losses. And the mistake is that the trading plans were built on the assumption that what has happened in the past will continue to repeat itself in the future. That is a farce, and it is going to cost you likely everything in time, even if you've been successful in the last 10 months. Here's a news flash. Anything that is bullish worked in the last 10 months. So you may think it's because of a MACD indicator or a stochastic or a price channel or whatever your methodology is. But when the market changes, it is very likely that that strategy will fall apart. Other people build dynamic strategies that change with market conditions, but they still assume that previous market conditions will repeat themselves. So the edge is actually found by being able to respond to real dynamic data on the fly. So as the data comes in on the right side of your chart, you are able to hunt down setups, hunt down opportunities, and then exploit those opportunities. This is a statement that you need to etch. You need to etch this in your brain. A mediocre strategy in a good market environment will outperform a great strategy in a poor market environment. A mediocre strategy in a great market environment will outperform a great strategy in a mediocre market environment. So how do we find the market environments? Well, let's talk about what moves markets. What moves markets? Well, is it me? Is it you as retail traders? Do we move the markets? No, we don't. Now, in light of recent events, some things are changing. This is another example of things being dynamic with the Reddit and Wall Street bets and the driving up of GameStop and AMC movie theaters, which I think is just a fantastic thing. It's an awesome, FU to the big hedge funds. But outside of that, the people or the things that move the market, I call them market giants. These are hedge funds, financial institutions, large investment banks. All right, they put billions and trillions of dollars to work. These giants are what actually move the market. Our job as traders, before we implement a strategy, before our risk-reward ratios are determined and we have all these different setups that we're looking for, we have to hunt down these giants. See, here's the good news. You and I, as retail traders, we're mice. We're insignificant to the market unless we can be herded in the millions like what just happened this past week. But that's probably a bit of an outlier, and the giants will continue to manipulate the market. But we are mice. The good news is that mice can come in and they can come out and they don't leave very many footprints. It's hard to track us and nobody really wants to. But giants cannot walk around without leaving massive footprints. Okay? So we can track down these giants, but we have to put in the work. And that work is how you trade in a dynamic market environment. That work helps you exploit environments that are conducive to the types of trades that you want to do. All right? So what happens is, if one giant gets together and they want to purchase something, they have to purchase, say, $1 billion worth of a security. They cannot do that all at one time. They have to plan those trades and they scale in and out of those trades, right? Because think about it, if they are trying to buy $1 billion of a stock at 50, just their purchasing power is going to drive the price of that stock up past 50, which would increase their cost basis. They need it to go up, come back down, buy some more, take another bite, go up, come back down, buy some more, take another bite, and they want to repeat that process. In the process of them doing that, they leave footprints. And what I am going to have to show you is how you find those footprints. Now, if it's one institution, that's one thing. Maybe even two institutions, those are a little bit harder to find. Sometimes institutions get together and they're so bullish on a particular market that they will actually compete for price, and they'll drive the price up very quickly. And they create a market environment that is very conducive to our strategies and our trades as retail traders. Now, that's a lot, and I'm walking up a hill. But what we have to do is figure out how to track these things down. In recent history, everything has been going up, up, up. Stimulus money has caused the US markets, at least, to become parabolic. They're going straight up. What we are on the cusp of is massive change. Rather we're looking at interest rates, rather we're looking at inflation, rather we're looking at home prices, the availability of homes, again, finance rates because of interest rates, a number of things, Wall Street bets moving the market. Things are changing. We are on the edge of massive, not just political change, but social change, and Wall Street will be affected. So, are you prepared for things to change? Now, if things continue to go the way that they have, and you have a strategy that's working, by all means continue to do that. But how will you know if they change? And will you be one of the people that fall apart once this change occurs? So, what I want to do to help prepare you is I'm currently creating a free trading course, and part 2 I was going to cover business, and I still want to cover business. It's very important, but I know that you came to this channel to talk about trading, and I want to talk about trading, so I'm going to skip part 2 and go straight to part 3 because I don't know where some of this change starts to be implemented and how soon. It may not happen, but you just have to be prepared for it. But I'm going to go straight to part 3, which is trading, short-term trading, swing trading. Part 4 is going to be intraday day trading. And then I'll come back to part 2 and we'll talk more about business. I just want you to be equipped for when and how and if this happens. Because no matter what, even if markets stay the way that they are for a long time, they will eventually change. And you have to have this top-down approach if you're going to survive and if you're going to get out of the typical trading life cycle. So I'm going to talk very specifically about how we find these giants, how we exploit those giants, because as the little mice that run around, Our job is to find the buying patterns of these big institutions. We climb on the giant's back and we ride them until they shake us off like the little pests that we are. And we can make a lot of money doing that. And so we want to make this easy as we possibly can. Problem is, it's not very easy. It's hard. It takes a lot of work. But if you do the homework, if you study on the weekends, you study at night, you stop leaning on just stock scanners, stop leaning just on strategies, stop leaning on setups and trying to search the internet for the next profitable setup, and pay attention to what I am telling you, you can be helped greatly, but only if you're willing to learn. We are at the precipice of massive change, and the learners will inherit the earth. If you will continue to learn, money will not be a problem. But if you are a laborer or a worker who is set in your ways, and you're still living like the data of life is static and not dynamic, you're going to be left in the dust. You are going to be absolutely obliterated by what's coming next. So I am going to try to walk you through this as best I can on how to do this. So one of the reasons that some of this is being compounded and made worse is because every time there is a market cycle or a market change, what happens is traders are flushed out. They lose a lot of their money and new traders came in. If you're watching this video and you came into the markets recently, it was likely a big downturn or a market change that brought you here, because those downturns and market changes drive up keyword volume on social media, Google, YouTube, things like that. And we, including myself, YouTubers, try to exploit keyword trends. So I'm going to pop up some keywords on the screen just so you can see. Now these are various keywords, and I want you to pay attention to what their average volume was prior to the big slide that we had in 2020. And what you'll see on these keywords is there was an increase in volume, and that volume has stayed increased. So the interest in trading is elevated to a rate where it's never been before. And it's given rise to so many YouTubers and influencers. Now, I am not supposing or saying that these YouTubers are intentionally being negative or doing anything harmful. They're trying to educate. The problem is most of these YouTubers started trading within the last 3 or 4 years. They've only traded straight up bull markets. And they don't yet know that the markets can change. And when they do, you get your butt cut. It's really bad. So what I want to do is talk about those things. Back testing a strategy on static data and thinking that that will just continue to play out that way, it's foolishness, it's ignorant, and it will cost you, even if you're making short-term gains. I'm telling you. So don't say I didn't tell you. I warned you, okay? But we can be ready for these things. I can't go into the details, but in part 3 of the course, I'm going to tell you exactly how we find market environments that give us the highest probability of success, even when things change drastically. We cannot predict what's going to happen. No one can. Someone's always right and someone's wrong, and the person that's right gets credit for being a genius, and then they're wrong next time. So people that called the 87 stock market crash, they missed the tech bubble. People that nailed the tech bubble missed the financial crash of 2007, 2008. It just goes on and on. But whoever calls it right gets credit, and everyone pays them attention, and they're eventually wrong. So here's the thing. Nobody knows what's going to happen, including me. We have to be able to respond as it's happening. We have to be able to exploit whatever market opportunities present themselves when they present themselves. But first, you have to know how to look into these things. All right, so that's the message for today. Markets are dynamic. They're constantly changing. Do not fall into the trap of thinking that your strategy is going to work forever. You must develop the skill of being able to assess markets, assess opportunities, and then exploit those opportunities. For those of you who made it this far in this video, well, I did a quick YouTube story the other day, and I was showing some of my books that I had in my office. That is not even a fourth of the books that I have or have read in the areas of finance or investing or trading. But those happen to be the ones I have in my office that I haven't given away. I want to give them all away. So anyone who's listening to this, if you comment, send me a book. Just write, send me a book in the comment section. I'll sign the book, I'll write you a little note and I will mail it to you anywhere in the world that you are. I'll contact you via email and get your information. I'll send those out, and I'm going to try to do that at the end of a lot of my videos. I'm just going to start giving books away because I think it's a powerful thing. Again, I'm not predicting a downturn in the market. I'm not predicting an upturn. I'm predicting change. Change is coming. Change is already here. Look at it. Look at political change. Look at market change. Look at currency change. Look at things that are going on with central banks. Look at things that are happening on social media. Look at free speech, social unrest. I don't mean to smile because these things are not always positive, but that change opens the door for disruption, and it opens the door for people like me and you to make significant amounts of money. But we cannot just blindly apply a trading strategy. Please wake up. Please wake up and stop gorging yourself on videos that show you what happened and what worked so well in hindsight. It's just a tool. When I put a strategy on my channel, it's because that strategy is to be applied in really good market environments and it will work. You apply that same strategy in a poor market environment, it's not going to work. You're going to get crushed no matter how good the strategy is. So that's the point. Let's learn about market environments. Let me show you how to figure that out. And then you apply whatever strategy you want. Find the one that works. It won't matter because you'll be exploiting opportunities that are there. You'll be riding on the backs of institutions. And on that, I'll leave you with this. The people who are watching this content and thinking that this is how the market works, the content that's being produced by some folks that are promising great returns and assuming a bull market that will last forever. Remember I said we're mice? Have you ever seen what's on a mouse trap? It's cheese, right? Okay. Well, the institutions know this as well. That cheese on the mouse trap is not food. The cheese on the mouse trap is bait. It's bait. That trap will close. Where are you going to be when that happens? How will you react? Let's do this thing together.